Hello, my name is Steve Bigelow with the Candlestick Forum. The market's doing exactly what we'd expect it to be doing. Using the T-line rule, which basically says as long as you can't close above the T-line, the downtrend is in progress. As we saw last week, bullish harami in the oversold area, implying that there might be a change of investor sentiment. However, notice what happened Thursday and Friday. They couldn't close it back up above the T-line. Friday, when they sold it off, that was a pretty good indication the downtrend was still in progress, especially if they could come down through this level. As we saw, the bearish investor sentiment excelled today. The market was down 600 points. It bounced up from the lows, but nothing yet tells us there's anything bullish in this market. Same scenario on the NASDAQ. Bullish harami on Wednesday. Thursday, they brought it up some more, just closed above the T-line, given the prospects they could be reversing, except for one caveat. They weren't in the oversold area yet. That would have created a little bit of skepticism of whether the bulls are taking control. Friday was a good confirmation that they hadn't. So the downtrend was in progress. So the rhetorical question is, do you always get big price moves when the T-line's not breached? The answer is no, but you're putting yourself in a situation with the T-line rule that as long as it closes below the T-line, the prospects for a downtrend is greatly enhanced and puts you in situations where you're going to participate in big moves like this. Remember, this is bearish sentiment. This is where bearish sentiment was kicking in. So that allowed us to find the best short trades over the weekend. There's your bearish best friend. Remember, 2 + 2 analysis is the more you can add into your analysis of candlestick signals, the higher the probability you're going to be in the right trade at the right time. So you had a bearish best friend on Friday that not only created a bearish best friend ending this uptrend, but with a close below the T-line, that told you the investor sentiment had changed, especially with stochastics started to head down. If you didn't short it here, you could be shorting it here, because what's the probability factor at this point? You're still in a downtrend. Same thing with Bidu, except this best friend occurred right off the 50-day moving average, gapping down through the T-line. That all adds up to the fact that they could be taking this lower, possibly back into filling this gap. So this allows you to identify when short positions should be put on. As we saw in QFIN last week, bearish signals, then a gap down through the T-line and the 50. That tells you as long as the market is in a downtrend, you can stay short on a position like that. The bigger the signal, the more compelling. The bears are in control. And as long as they couldn't close above the T-line, that told you they were heading for the next target. Ramp came all the way down to the 50 today, but still in a downtrend. So you want to see what happens tomorrow. And this is the same thing for the market in general. The Dow off 600 points. It could have a bounce, but until you see a confirmed buy signal, assume that the downtrend is in progress. That'll be it. We'll see you in the chat rooms.